All right, we'll call this this finance committee meeting to order. Roll call, please.
Here.
Al Dasso, Kristen Runge. Here. Joe Zitzelsberger,
Here.
Sarah Whitley. Here. Tom Wilson.
Here.
Paul Cardarella.
All right, we'll look at the consent agenda. Looks like just one item on there. Any comments or look for a motion?
Move to approve the consent agenda. Second.
Motion by Kristen and second by Sarah. Any additional discussion? All right, we'll call the question. All in favor signify by saying aye.
Aye.
Opposed?
Since this is my first meeting, I'll abstain.
Makes good sense. We'll move on to public comment. Not seeing any public. And I'm assuming we're just recording, we're not live. Okay. Then there will be no public comment. On to new business. We have two items and it's been requested that we switch the order of those. So I'll make a motion to reorder the agenda. We'll take item 2 first.
Second.
And a second by Robert. All those in favor signify by saying aye.
Aye.
Opposed? All right, and we'll go on to new business number 2. Discuss and take action on potential creation of additional fund balance policy related to use of unassigned fund balance in the general fund in excess of village policy. That's a mouthful.
It is a mouthful. So this was on the last meeting's agenda, but we had a couple missing members. And so there was a motion to push this to the next meeting. Originally kind of brought up a number of meetings ago by Al to bring this up. So the village has a policy to maintain the general fund unassigned fund balance between 20 and 25% of next year's operating budget. Our 2022 audit report, which has now been issued, it's no longer in draft, we were at 27.7%. However, in recent years, we've been as high as, I think, around 31% of that, which is, pretty significantly over our policy. So we've done different things with that excess, including funding the Rip Park tennis courts, redo a couple of years ago, and paying off the library state trust fund loan. And those were approved directly by the village board to use that fund balance. But we thought we would bring it up as an item for discussion to see if there should be a policy on what to do if that fund balance is in excess.
All right. Obviously, I think there are a lot of different options, but I'll look to the crew here to start with any ideas or thoughts or whatever you might have.
I just have a question. So we're talking about an amount the village usually has 20 to 25%. That's what you're aiming for in this unassigned fund
Right,
balance.
kind of a rainy day.
Exactly. I don't have a problem with that.
Yep.
But what we're talking about is if we have more than that 25%,
Right. Should there be a policy?
you were looking for a policy, what to do with that or not to have it, or that's what I'm wondering just right off the bat.
I'm not necessarily looking for a policy. In that, my question comes down to one, budgeting, and number 2, if we perform better than the budget, what happens to that excess? The excess, obviously, we should stay within the 20-25%. I'm not debating that. That's been explored. That's been, done before, and I'm not looking to recreate those thought process. Although I would suspect that when it was created, times have changed. I'm guessing, I don't remember, but I would suspect we didn't have as much assigned dollars as we do today. without historical information, and that's why to listen to the auditor talk about 41% and 40%. I don't know if that's apples to apples and if it's a good comparison, because there's a lot that goes into those calculations of what is the unassigned fund balance. I do have a concern that when we do exceed the budget, that we prepay on debt, or we buy fixed assets, or we do something that's outside the norm. I understand the intent to spend down the excess, but I come from the standpoint that I do believe we should be taxed on what we use. I don't believe we should be buying, as an example, and I'm not being critical, but as an example, we buy tennis courts, which have a 15-year life, but we use today's taxpayers who paid for that. And then future taxpayers get the benefit of the tennis court free of charge, because it's been already assessed against the taxpayers of today. The same with the debt service. To prepay debt, the debt was set up, or should be set up, to match the useful life of the asset. So taxpayers are charged for the useful life of that fixed asset as it's consumed in operations. And now to prepay charges today's current taxpayers for a future benefit. And there's a mismatch then between use and the cost of that, whatever it is, debt. So my question is, in a perfect world, and I know this is not a perfect world, budgeting is never a perfect world, and I know we're not in private enterprise, which is a completely different concept, which says, yeah, retained earnings is good, you're making money, but when you're taxing people, it has a little different concept in that the village is not here to make money and to retain the money, and that's a little bit of my concern. Now, in the perfect world, you would give that money back to the citizens. If you overtaxed, you get back to the citizens. And when I do the calculations, and when I went through and I listened to the last finance meeting twice, because I was bored, I guess, I don't know. It's my excitement for the day. But I went through it twice and listened to it, and there was a big adjustment with the investments, and I understand, you hold investments, and so it's a kind of a paper loss. So you had back roughly $500,000, $478,000 to, for lack of a better term, the net income from last year. And there actually is $1.2 million then that were made over what was budgeted. Again, adding back the investments, which equates to overtaxing the citizens by, when I divide that by the 5,241 taxing citizens, that comes up with $200 of overtaxing of each citizen on average. So that's when I get a little, what should happen with that excess? And I know budgeting is not a perfect science. I'm not looking for the perfect science. And we do have the rainy day fund of 20 to 25%. I'm not in disagreement with that. I think that has changed a little bit in the context when it was first created, but that's okay. But what should happen with the excess? Should it go back to the taxpayers? Should it go to affordable housing, which is the buzzword? And I hear about affordable housing being obviously discussed in many contexts. But I've talked about trying to freeze property taxes for people, or giving some incentive to folks. Well, my point is that I think I'd like to revisit, or my concept was to revisit the thought of what happens when we do make more money than budgeted, and should it go back into the equity? Should we pay for fixed assets? Should we prepay on debt? No one likes debt, but again, in this context, it reflects user charges and economic use. So I guess what my thought was, opening up to the board here, or to the commission, maybe we should have a discussion as to whether or not what should happen with that excess money. And that's where I was coming from.
Can I just make one clarification? So that when we pay down that state trust fund loan, That was because we didn't end up selling the old library building. We were never intending to keep that debt on our books for the full 20 years or whatever. We took out that state trust fund loan. We were gonna use the proceeds of the sale of the old library to pay that off. And when COVID hit, we didn't sell it, and then we decided to keep it. That's why we paid off that particular debt. I think that was not a general concept of using fund balance to pay down debt. Just wanted to clarify for.
Yeah, and that's fine, Renee. And I only respond because that's what's in the agenda, says that is one of the items that we did, that was done. I'm not saying in that particular circumstance was incorrect. By no means am I saying that, but I guess I'm looking at a bigger, broader brushstroke as to what to do with the income or the excess revenue.
Well, first of all, we have to have it. So I think it is also from income. There could be higher tax income than you might normally expect from general property for some reason. But wouldn't it occur also if you have a budgeted item for a big road improvement project? It just didn't cost as much. I mean, is that a possibility? Or
Right, that's
how,
sometimes
and that's how
happens.
this is happening, or you
Right.
budgeted an amount for a piece of equipment that maybe it came in less and your borrowing had to be, I mean, I'm just thinking there's probably good reasons why that amount is the way it is, and it might be spending less in some
Right,
way,
or
shape
like
or
Todd
form
just said, maybe staffing vacancies
that don't
for a
get filled,
period of time that we can't fill.
right?
Right, it's not, yeah.
I'm not debating that. You know, the budget process, the whole, you can, and I've heard the term many times, that we budget conservatively. Well, I'm not sure that's the correct term, because you should be budgeting based on what you realistically think it is versus conservative. I understand, you know, why you would do it conservatively, but it should be a realistic budget as to what you think. And once the budget's approved, I'm not debating as to whether or not the equipment comes over or under and what creates it necessarily. My question is what happens if it comes under and you do a great job of buying something less or building something less than what it costs? What happens to that excess? Because now the taxpayers have contributed to a higher road or a higher piece of equipment, and now there's excess money there.
Yeah, and right now it sounds like what's happening is that the village board with help of staff is figuring out what do we do with this amount of money, and that's what it comes down to, I think.
Yes, and sometimes we have applied it, we have used fund balance to reduce the tax levy. You know,
next
during the
year.
budget process, there's always, you know, we try and figure out an amount, not too much, not too little, to use fund balance to reduce the levy as well. So that speaks a little bit to what you're talking about in giving it back, in again, taking it off the next year's levy.
Right, and the intent last year for the 2022 budget was for that to happen. But again, we ended up with a little different situation, so.
If I can ask, so when Baker Tilly came at the last meeting and we got their numbers for 2020 and 2021 for the median for other municipalities in our range, and I can see that we're significantly below the median in that case. Do you happen to know what some of those other municipalities are doing with, since I mean, when the median's 40% in 2020 or 21, excuse me, I mean, do we have word from what other similarly sized municipalities are doing with their overages?
I do not know, because I don't know specifically. He did not tell me. I think he said there was 13 other municipalities that were in their comparison. He did not tell me which municipalities they were
Okay.
specifically. So I don't know what they're doing with it. I am not sure.
Okay.
And I would caution using a piece of information amongst a lot of information. And these financial statements are really complex. As I read through them 2 or 3 times, trying to figure all this stuff out, track money, and it's complex, but you're given a piece of information on a number and not looking at the entire picture. So I understand what it is. I understand what he did. but it's just a piece of information, and not knowing the rest of it, you don't know the full story.
Correct. And we don't know the municipalities. They
Right.
could have very different circumstances.
It's a good guideline, but there's
Right.
more to it.
I guess where I was going with it, my question is that we're bringing this up for discussion. It seems a little open-ended, though. I'm not hearing what it is that, so is the call to action then that you would like to see, or we would like to see that we set a bright line for what we do with these excess funds so that they're not misused. So for example, if I was a taxpayer that was unhappy with seeing government grow bigger, I would want to see a policy in place that says, well, just because you have the extra funds doesn't mean, as you stated earlier, that you're buying fixed assets because you're just making government bigger because that's going to cost money further down the line. Or something I agree with, paying down debt early, because any debt that you have held now at this point is going to be a much lower interest rate than debt that you would acquire in the current market. So is that what we're looking at here, is just saying we would like to see a bright line policy that states, you know, if it's in excess, it must be used for X, where X could be lowering the tax rate?
I'm gonna let the rest of the board speak first.
I would personally feel more comfortable with a policy being a little bit more flexible than a strong bright line policy. I think we've seen enough unusual circumstances over the last 5 to 6 years where a policy that might make sense today, 5 years from now, might really put us in a constrained position. But I think if we had the ability that our role is to continue to give guidance on how that overage might be spent, and that our working philosophy is perhaps that we try to improve the financial condition of the village within the parameters of not using tomorrow's tax dollars to pay off tomorrow's burden. I'm saying that incorrectly. Or that we try to reduce the burden somehow on residents within the village, that if there is something that we could do to alleviate the burden for people who are finding it hard to pay their taxes or whatnot. I don't know what policies that would be, but something a little bit more flexible and more of a philosophy rather than a policy. Policies by necessity need to be followed, but kind of working philosophies might be a little bit easier to adjust to the times.
Go ahead, Tom.
So just kind of a basic fundamental question here. Does the village board want something from us? Does the village board even, I mean, we could spend time working on a policy, even an open-ended broad one. But I guess my question is, does the village board even want us to be working on something like this? Because I could see where, from the village's board perspective, a policy might not be what they want to have. You know, they really want broad discretion into using these unassigned funds. And whether it's to lower the tax rate the next year in some way, whether it's, we've had this park project out there for 25 years that we wanted to do. And then there's a consensus that we've got this extra money, we should do it. I mean, that could be a good thing too. Or paying down some debt that's at a higher interest rate. Let's get rid of that so we don't have to worry about it. It seems like having some broad discretion is what the board would want. So do they want us to look at it, or should this committee maybe get referred, if there are excess funds? Hey, here, this year, we have these funds and we'd like you to look at it and maybe make some recommendations on what it could be used for. And otherwise, I'm, you know, Al, I'd love to sit down and go through this and come up with something, but I think if it goes to the village board and they're like, what the heck did they work on this for? You know, we'd be spinning our wheels, and it'd be nice to see some guidance too from the village board, what exactly you might be looking for that we could help you with, the citizens on this group. So.
Aaron, thoughts?
I was just gonna say, Kristen, you were in my brain, saying everything that you're saying, because I think we would definitely, my take on it is that the village board would like we could give the village board direction on creating a policy, and a policy that actually can benefit, the current taxpayers, or like my world is affordable housing, so you triggered me there. And I think of 5 million things that we could do because affordable housing is not a reality in Wanakee. But yeah, I mean, I think it could be something open-ended, where just if we get to that, 25% that, yeah, whether it comes back to the finance committee to decide how we're gonna appropriate that money, and it could vary from year to year. It doesn't need to be the same thing every year, or it could be divided up, saying, possible tax credit, or, possible we move X amount of funds into a separate account to help people who might be struggling paying their taxes, or to a grant program to help, people who are renting here to purchase a home here. So I think it's something that we could create open-ended, and I think it would be a huge benefit to the whole community of Wanakee to have something like that. And I think it would keep, the village members of Wanakee excited to live here too, so.
So with all the discussion that's gone on here, it's occurred to me, we've been on the high end of this for many years now. Has there been a time where we were under 20%?
I am not aware that we were ever under 20%. Certainly not in my time here or even before. I mean, I think the 20 to 25% policy has been in place for 20 years.
Mhm.
And so I think historically they've probably been higher. And then but that 20 to 25% is a fairly common policy at other municipalities. But I don't know that we've ever been on the low end. Al may remember back when you were on the finance committee before, if you were ever.
I hear the question and I understand the question, but as I've alluded to, times have changed. And I think throughout the years that I've been in the finance committee, we've moved more money over to the assigned section. So to say that 20 to 25% is representative of what it was 20 years ago, or as good over the 20-year time period, I don't know, because the makeup of equity has changed, going from unassigned to assigned, and we've gotten much better in the reporting process. So is 20 to 25? Maybe it should be 10 to 15% based on where we are at today. I don't know without doing some historical information and taking a look at facts, and I don't know if Baker Tilly publishes any of their comparable municipality information, and which would be good to compare us against, just for sake of, getting some reference point. But I don't know if 20 to 25% is good or bad. I guess that was not necessarily what I was going after. I think it's a healthy, it's good to have a healthy relationship or equity, but at some point in time, again, we are not private enterprise. We're not here to make money. We're here to be custodians of taxpayers' dollars. The village does a great job of spending it, and obviously we've made more than planned, and the question is, should we do something with that or throw it into equity and leave it there? On the other hand, if we decide not to do that, we've spent a lot of time on affordable housing, our groups, on the CDA. And my comment to the CDA is, why do we need to extend the TIF a year? Why don't we just have the village write a check directly into affordable housing? It doesn't have to come through an extension of TIF. we could certainly take the excess cash, which you alluded to, Sarah, and move it over into some type of affordable housing. And we've heard many times that seniors are having troubles, of which, by the way, September 1st, I'm on Medicare. Seniors are having trouble paying or maintaining their homes. All kidding aside. So I've made the comment, maybe we should be as in some other jurisdictions, freezing real estate taxes when people hit a certain age as a concept. Maybe the Wisconsin law would modify that a bit, but it's just a thought that it's a way to make housing affordable in Waunakee, if that would be one of the criteria. But I go back to Tom's question about, what is our mission? And I think at this point, I'm guessing it's just a general discussion. We have 3 board members at the table here, and they'll have to decide yay or nay as to what we do or don't do. Should we come up with I'm not certain a policy is the right thing as opposed to a guideline. Policy is pretty stringent. I guess the first thing, if you were to ask, maybe we should go back and revisit that 20 to 25%. I'd like to see Baker Tilly's other information if they have it and they can publish it or give it to us as a reference point, because you always benchmark yourself against other comparable sized entities. When I do valuation work, we're always looking for industry data and benchmarking the subject company against other related entities. So there's a lot of information that goes into it. I just don't know what the ask is of us as well, but for the general concept that, when I saw the $800,000, and I appreciate you explaining it further, being prepaid or prepaying on fixed assets. And again, I'm the type of guy that you pay for it, whoever uses it pays for it. So if you buy a piece of equipment, it should, in the last 10 years, the debt should be 10 years. And every taxpayer who uses that for 10 years, you got to pay for it. And now if you charge today's taxpayers for tomorrow's use, that's not fair in my opinion.
Go ahead, Tom.
Okay, so. Trying to think out loud a little bit here. Maybe what we should do, and I don't think it'd be a bad idea at all, is maybe what we need to do is ask the village board. Do they want us to talk about some kind of policy related to the use of unassigned fund balance in the general fund in excess of village policy, or revisit that policy? Could be both. That way the village board can have a discussion about this too and hear what's been told here and send it back to us, where staff would have something, maybe some direction from here and there to help us come up with something if was wanted. Otherwise, we've had this fine discussion for half hour and that's all good. And you're right, there's 3 board members here. They've heard the issue, but it almost seems like, and I could probably come up with a motion, which would be to request that the village board refer something back to us to work on this and take the time to work on it. And I'm willing to do that. I mean, it sounds like you are. Yeah. And I think the board members certainly would be, it might be helpful to you in the long run and staff for them to work on it too, just to rethink it. That's a thought. And I don't know what if other people are thinking maybe that's a good way to handle it, but.
Robert?
So my concern is that, especially when we talk about things like affordable housing, which should not be controversial, but unfortunately is that we wouldn't want to unwittingly, now I'm speaking for myself here rather than for the board, but I would not want to unwittingly create a situation in which the village would be accused of setting up a system in which we didn't handle it in our budgeting process. And then we snuck in the unpopular stuff later under the unassigned fund balance as a later thing that, we have this, we had guidance that we should do this with this money. And the obvious question is going to be, well, why didn't you just budget it into the budget? Which is where I completely agree with Sarah, and to a certain extent with Al on, extending TIF for that funding. And that's something that I just would want some awareness on, that this isn't designed to be a backdoor to get in pet projects in the future, that just were not popular enough to put in the general budgeting process, because the general budgeting process is where the public gets the most say in what we're doing, and that's why we have the hearings. So a future one, it could possibly be done without a public hearing. It could just be, normal village business. And I guarantee you there will be people who would be upset if we did things that way.
Sounds like
So-
the first policy, Robert. This is
Exactly. Yeah,
an explanation. This is not a back door.
yeah.
We're not planning on having this extra money to do what we didn't want to do in the first place because there might be some political concern. This is, I think that could be a good thing to have right at the beginning.
I think you bring up some good concerns. You're probably not the only person that looks at the budget at the end of the year and says, I wonder how they make that decision and
Not
those
many of us.
decisions. Well, so it's probably worth a discussion, and probably worth maybe an investigation. Again, the idea of a policy placing a lot of constraints on a board is something I'm not comfortable with, just because we've had such an unusual experience the last 5 years. But guidance and kind of a philosophy in how we do things, I think is probably good.
We do need to urge the committee along, because the next item is on for action for the board, so we want to get to that.
You guys wanted to make a motion, right?
Well, I can, if you want.
Do we need a motion, or do we need to just, not even table it? Can we just
Refer it.
refer it without a motion?
Um,
I'm not
I
sure.
feel like I should
I'm
know that,
sure.
but I don't.
so.
Do we need to call the village attorney?
Certainly, we can take,
You can take whatever emotion.
guidance and we can, bring it forth to the village board.
I think a motion
Probably a
probably would
motion,
not
it
hurt.
would probably
Good.
be
All right.
appropriate.
I'd be happy to make a motion. I would move that we request that the village board refer to us the potential creation of additional fund insurance policies related to the use of unassigned fund balance in the general fund in excess of the village policy, including the percentage of what that amount should be.
I'll second that.
All right, we've got a motion by Tom, second by Kristen. Any additional discussion?
I hate to say it, but could you repeat that motion? I really hate to ask.
I can. The motion is to request that the board refer to this committee to work on potential creation of additional fund balance policy related to the use of unassigned fund balance in the general fund in excess of village policy and the amount of that fund percentage.
Thank you. You retain.
And I was.
Right, yes. I
And you
repeat my
notice I
second.
wasn't on when I said that either.
Okay, any additional discussion? Seeing none, all those in favor signify by saying aye.
Aye.
Opposed? And that motion carries. That'll bring us back to item number 1. Which we'll get there. That is the discuss and take action on the assessment contract with Associated Appraisal.
We do have Dean Peters, our contracted appraiser with us. Hi, Dean. And I'm going to share the screen with the proposal that you've seen at your last meeting, and then again in your packet this meeting. And I'll turn it over to Renee.
Oh, to me, this was you last time, so I thought it was
Oh.
you again.
Well, then okay, sharing my screen. And Dean's here again with us virtually. Dean, can we hear you?
Yes, can you hear me?
We can hear you. We can't see you, but that's okay.
All right, I wonder if I can, I'm sorry, I should have tested my video here.
Dean, it's Tom Wilson. We don't need to see you, buddy.
Dean mentioned at the last meeting, he was sad that you weren't here.
Yeah,
But we had a good conversation at your last meeting. We wanted you to digest the proposal, as that was the first meeting you saw it. Hopefully you've had a chance to think about it more. Dean's prepared to answer further questions. And again, the options presented there at the bottom, those 5 alternatives are alternatives to the annual maintenance approach, which is what we currently do, shown at the top of the page. So we could continue with our current practice as shown above, or make a modification to one of the proposals shown below. And Dean reviewed those last time. To the extent that you want to dive deeper into any of those options, Dean's happy to walk us through it again and provide further explanation.
Yes, Tom.
Okay, so Wilson is on your board of review. And in my previous life, I was of course on a board of review and helped prepare people for a board review. I was a trainer for boards of review. I've worked with Dean and Associated extensively, and just so you know, my opinion is that there is no better assessor in the state than the company that we've been utilizing. They're very good. They are as quick to respond as they can be. It's tough to respond to when you do a market revaluation of an entire village. The size of Wanakee, where you're already 20% behind the value you probably should be village-wide. And then in the time you've made the decision to contract and do it, you're another 10% behind. So people are seeing, it's hard for an average citizen to equate that my assessment is gonna go up 30%, but now you're trying to tell me my tax bill is not. And they're pretty good, in my opinion, at helping people with that. Their values are pretty good. They're really good at evaluating the market. The problem that we're seeing is that in the village, we are not updating that market quick enough. We're not doing that market evaluation. And, you know, the rules have changed with assessments. So getting into everybody's house is not as easy as it used to be. It's also expensive and time consuming and unnecessary if you see building permits and if you see what the sales are. And you do an exterior view of the house to see somebody didn't just add a room on. So one of the services that was described here, besides this annual maintenance, was the annual maintenance with doing this market evaluations down there. I think it's like the fourth one down every couple of years. And I think that was somewhat the consensus that I heard the last time from the last meeting. And I watched and I got a smile because I thought people are thinking along the same lines. I think that will help you stay up to date in values so people aren't making calls to Carla and the staff here because they don't understand the difference, or flooding Dean with phone calls or flooding a board of review. Just so you know, after all of that happened this year, after an increase of almost 30% in the average assessment, we had 5 people come to board of review. That's the job that they did and Carla did in making sure that people were comfortable in what happened. 5 years, I think 5 years is an important time period. It's kind of industry standard. 10 is too long. I think 3 is too short because then you're maybe looking at getting another assessor in 3 years, and to change is mind-boggling in some aspects from how you deal with assessors all the time. So I'm good with making a recommendation to the board on the assessor, on the 5-year contract, and the annual maintenance with the 2 IMU revaluations, as you talked about the last meeting. And if we get to a point where you want me to make a motion, I'm happy to make that motion, but I don't know that I can't remember if Al was here at the last meeting or not.
I did want to add one important piece of context that's important for somebody who might be watching this recording or unfamiliar. The question of interior inspections as a crucial component to discover changes that people have made to their house. And Dean can talk about this better than I can, but an important change that has occurred in the laws above the village is that there essentially is no penalty to somebody to refuse entry to the assessor. There used to be, and that was that they would lose the right to appeal if they didn't allow the assessor in. That is no longer the case. That stick of sorts doesn't exist legally to the village or the assessor anymore. And Dean, if you want to correct me, I think that's an important addition to the full context, Tom.
Sure. and I figured out my camera issue. So, you're right, Todd, that it used to be that if an individual refused access to the interior of the home or to the inspection of the property in general, that the assessor could send a certified letter to the property owner requesting an inspection. And if they still refused or failed to take action after that certified mail request, then they would lose their right to appeal the assessment at board of review. So there was some leverage, some kind of incentive to allow the property owner or to allow the assessor to view the property. And we used to get, somewhere in the neighborhood of, I would say 70 to 80% entrance rates when we applied that process. And we would consistently view the interiors of homes. But once that process was taken away from us, I think 6 or 7 years ago with the Supreme Court decision, and we had COVID-19, which I think made property owners even a little less likely to allow somebody they don't know to walk through their home, that the mindset of the public has just changed. And now you have, if you request interior inspections, you're going to have a percentage of property owners that comply with that very happily. And then you're going to have several that do not. And in the end, you may end up, quote unquote, punishing the people who comply, the small minority who comply, because those are the ones you're going to find, the improvements that they made to their homes, and the rest of the people who don't cooperate are going to get off without being assessed for those improvements. And so most municipalities have started to take the viewpoint of, well, if you're only going to get into, 20, 30, 40% of the homes, then maybe we should just consider exterior only or market updates, which is what we're talking about in this case.
So I served on the board of review for about 20 years as chair. I did my time, and I say that and I agree with Tom when it comes to Dean and his group of people. The prior assessors were not as thorough by any stretch of the imagination, but I did go through a full reval one year. Spent 80 hours listening to people appeal their assessments, but I got my $25. It was painful. It was painful, but so in all due respect to who we currently are working with, it was much easier for the rest of the time period with under his control. So I do appreciate that. But one of the things I was looking at in the contract, the existing contract, which was not signed off by the village, and I've heard this many times from people who have appealed as well as in general discussions, but there's an optional website posting paragraph in there for $82.22 where the public has access to Associated Appraisals information. If that would help the either open book or general discussion or appeal process by giving taxpayers access to information in other people's homes. And I say that because I know in a number of appeals, they all said, well, so-and-so's home is this. Well, it's not quite the same. And Dean did a great job of defending his rationale. And he certainly pointed out the differences between the two homes. But giving public access, would that save staff time? And give people information to help them better understand the taxing process or assessment.
I thought that was used.
I thought so too. Dean, do we already have that? Because I
believe
thought
you
we do
do.
pay an additional small bit. like
It was one of
$80.
it was on your website and you had your communities, the Village of Wanakee was there. And I thought you could click on it and find the values.
Yes, and you're not just finding values. You can see that on Access Dane. What you're seeing on the website is the full property record, including, the drawing of the house that we use to calculate square footage, the bedroom, bathroom counts, the square footage broken out by floors, any accessory buildings, land information, the whole property record. And that is very helpful for property owners if they're trying to make a comparison. So I recommend it.
And I appreciate that, Dean. And the only reason I
$82.
bring it up is because the signed contract does not say, please initially yes or no to post data to the website. So obviously something else happened here, but that's fine.
Yes, and maybe we do need to make it more publicly known that that's available, because I think it is currently available. and again, this was the old contract. I think it was Paul that had asked that be put into the packet, but we can certainly make sure that's part of it.
All right.
Yes, that option will be available moving forward and the price hasn't changed.
Good to know. Additional thoughts?
I wasn't on the board of review, but from our perspective, it seemed to go as smoothly as one could imagine it going. And it seemed to run very well. So I appreciate the work on everyone's behalf and on your behalf, Dean, and your crew's job for putting together a good process.
Thank you.
Do you want a motion to make a recommendation?
I think we
Sure.
do.
Yeah, we do. I do want to first say that I've also been on the board of review. I think I did about 8 years. So you guys are definitely the seniors, but
The rest of us better put in our time. So, all right.
Well, I'll make a motion that that we recommend to the village board that they accept the contract proposal for Associated as presented using the annual maintenance plus the 2 IMU revaluations and also that option website posting at E of the contract.
I'll second it.
all right. Tom with the motion, Sarah with the second. Any additional discussion?
Do you recommended at the last
Oh,
meeting?
gotta
Oh,
turn your mic
your
on.
mic.
Yep.
Dean, you recommended last, you had a recommendation as to, and I don't recall your recommendation. Is what Tom Wilson's recommending or moved, is that your recommendation? Or is there something else you recommend? I just don't recall.
Sure, the one that Tom had made a motion about is the one that I said I favored. Yes, it's the same one.
Thank you.
All right. Any other discussion? Seeing none, all those in favor signify by saying aye.
Aye.
Opposed? And the motion carries. Then we'll look for just a single final motion.
Move to adjourn.
Second.
All those in favor?
Aye.
Opposed?
Aye.
And just so Dean's aware, there is a different login, Dean, for the village board meeting. So we'll
Okay.
have you- and then come back in on the new link. Do you have that?
Good. Please send me the link again, just to make sure I have the most current one. And thank you all for the positive comments.
Yeah, you're welcome.